Is Novo Nordisk, ticker symbol NVO, a good stock to buy now? Welcome to Global Value. Today, we're performing a fundamental analysis of Novo using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Novo Nordisk is worth in today's stock market. Plus, I'll share 2 special bonuses that could be the deciding safety factors when adding Novo Nordisk stock to your portfolio. Right now, Novo Nordisk trades for $126.73 per share. In its last day of trading, it's down 0.88%. However, since July of 2023, Novo Nordisk stock is up 65%. This crushes the market and the S&P 500, which is only up 20%. In the last 5 years, they're also one of the top performers, compounding at 41% annually. In the last decade, they're compounding at 20% annually, and they've been beating the market since 2022. When we go back before the global financial crisis, in the last 2 decades, Novo Nordisk has compounded at 23% annually. Overall, they've crushed the market. Even better for shareholders, right now Novo has a 0.78% dividend yield that's added on to the gains in their stock. Today, Novo trades $20 below its 52-week high, but they're still up $50 from their 52-week low. With their big run-up, they're one of the largest biopharmaceutical companies in the world with a $569 billion market cap. Right now, Novo's stock in America is owned by just 5 super investors, and this is led by Tom Gaynor at Markel, who has a 2.7% position. Terry Smith, who's been called the British Warren Buffett, owns Novo through its European-listed shares in his Fundsmith portfolio. Getting started with metric number 1, we want their average return on capital to be above 14%. Over the long run, it's these returns that drive stock gains. They tell you how much value the company's creating. It's hard to believe when looking at Novo Nordisk, but the average business only earns 7% returns. Novo, on the other hand, earns 70% in an average year. That's 10 times better than normal. Keep in mind, these returns have ranged from 84% down to 58% depending on the year, but they're still massive. It's a huge check on metric number 1. Now, why does the company have such high returns? With roughly 1/3 of the global branded diabetes treatment market, Novo Nordisk is the leading provider of diabetes care products in the world. Based in Denmark, the company manufactures and markets a variety of human and modern insulins, injectable diabetes treatments such as GLP-1 therapy, oral anti-diabetic agents, and obesity treatments. Novo also has a biopharmaceutical segment that makes up 10% of sales, which specializes in protein therapies for hemophilia and other disorders. As an asset-light biopharmaceutical company, it's no surprise they earn such high returns, especially with such big success worldwide. Next, can their sales, earnings, and free cash flows grow to support their high returns? That's what we want in metric number 2. In the last 5 years, their sales have nearly doubled. At the same time, their earnings have more than doubled. Their cash flows are up 62%, and this is growth across the board. It's another check on metric number 2. In metric number 3, we want to see what they do for individual shareholders. In this, we want earnings per share growth. In the last 5 years, Novo Nordisk has not only doubled their earnings, they've also bought back 6% of their shares. This means their earnings per share grow even faster, and it's another check on metric number 3. The company's numbers look great so far. Metric 4 is similar, but even more important. We want free cash flow per share growth because free cash flows are the lifeblood of any business. The company's cash flows aren't up as much as their earnings, but they're still up over this time. It's yet another check, and Novo is perfect through our first 4 metrics. Now, why don't we look at their dividends? Right now, Novo Nordisk pays a 0.76% dividend yield, and we want this to be covered by their cash flows. Novo's recently been growing their dividends for each of the last 4 years. They grew these by 55% year over year, and they buy back around 1% of their shares. Today, they have nearly a 2% shareholder yield, even coming off all-time highs. Thankfully for shareholders, they've not only grown their cash flows and their dividends over this time, they easily support them as well. Things are a little tighter today after a big increase in their last year, but they're still supported. It's what we want, and it's a check on their dividends. Now, let's look at the company's balance sheet. Wonderful companies earn high returns, they grow, and they don't need a lot of debt. The company had net cash in 2023, and today they just have $2.5 billion in net debt. In the last 5 years, they bring in a ton of growing free cash flow, bringing in $42.6 billion over this time. They generate a massive amount, and they use very little debt in their business. It's another huge check here on metric number 5. Novo Nordisk can grow, earn high returns, and they don't use a lot of debt. They fit the criteria of being a wonderful company according to Warren Buffett. But are they trading at a fair valuation? We'll find out after we cover our safety bonus. Warren Buffett's teacher, the father of value investing, Ben Graham, wanted a current ratio greater than 1.5 times. This is a key measure for how a company can pay its bills in a hurry. For Novo, they actually have a current ratio under 1. Usually this could be a bad sign for a business. Instead, for this company, it's part of how they earn very high returns by having almost negative working capital. Other companies that do this are Apple and Amazon's e-commerce business. It's no wonder they have such high returns. Still though, this is something to understand as you dive deeper into the company. It's an X, but it's not that much of a concern given their big cash pile and their strong cash flows. Now, what is Novo Nordisk worth? In the big metric of them all, metric number 6, we want their average cash flows divided by their enterprise value to give us a yield greater than 5%. This is our first valuation today, and it would be in line with the historical yield from the S&P 500. It would also give a risk premium to the 10-year treasury. Right now, Novo has a $570 billion enterprise value. With their stock trading lower, their enterprise value is down. This is the number we get when we add their market cap and their net debt together. It can help us look at Novo like it's a private business. In an average year over this time, the company brings in $8.5 billion of cash flows. When they're divided by their enterprise value, it only gives us a 1.5% average yield. More recently, they brought in $10.4 billion of cash flow. When that's divided, it still only gives us a 1.8% current yield. Both of these are below the 10-year treasury and the 5% benchmark we wanted. This means in addition to our safety bonus, it's the only X of the day on Novo Nordisk. Don't just throw the business out, however. We still have 2 more valuations to look at before we combine them at the end of the video to get their fair value. Next, we'll use a DCF model to credit Novo for its growth. Here, to show a point, we'll use their highest cash flows and historical assumptions to grow them into the future. Let's assume they grow 11% every year for the next decade. Then, in the following decade, we'll assume they grow at 10% every year. Next, we'll add in their tangible book value to give them credit for their net worth. If we want a market-beating 15% rate of return, which is what Warren Buffett wants, then at today's valuations, this DCF model says Novo Nordisk is only worth around $34 per share. That's even with decent assumptions, and Novo's been a predictable business in its past. Why so low, you ask? It's because Novo is more than a $500 billion company and it's trading for 16 times sales. In the last decade alone, its sales multiple went up more than 3 times. In their history, Novo's a long-term compounder, but they've really taken off just in the last few years, almost going vertical. The math makes it tough for the company to deliver the same returns in the future that it has in the past. This is why our third valuation comes in at $110 per share, down $16 from their stock price. Warren Buffett likes the numbers, but it's the qualities of a company that he truly loves. Why don't we learn what these are for Novo through a long and a short thesis? We'll start with a long thesis first. Number 1, Novo's new obesity therapy, Wegovy, is significantly expanding the obesity treatment market given its strong efficacy. It's poised to remain a key drug in the market until patent expiration in 2032. Number 2, with a solid portfolio of GLP-1 products, including injectable Ozempic and oral Rybelsus, Novo is well positioned to defend its formidable diabetes market share. Number 3, semaglutide is also being studied in areas including liver disease, NASH, and Alzheimer's. Novo could achieve a strong share in these nascent markets. But things aren't all positive. Let's look at a short thesis as well. Number 1, Tribessa's strong profile in the long-acting insulin market hasn't been enough to defend it from US pricing pressure due to competition from Sanofi and Lilly. Biosimilar insulins have also weighed on category pricing since 2017. Number 2, Novo's Victoza and Ozempic have made GLP-1 a key part of the firm's diabetes growth, but oral GLP-1 Rybelsus has had a slower uptake. Lilly's newly approved Mounjaro also provides strong competition. Number 3, Novo's obesity drug Wegovy had a slow launch due to supply constraints, and Zepbound, which is Lilly's obesity drug, has a potentially superior profile. Now let's put everything together for Novo Nordisk. In our fundamental review, we learned the company goes 5 for 6 on the Select 6 analysis. They earn insane returns on capital, and they've grown a good amount in the last handful of years. They also just use a small amount of debt in their business, generate a lot of cash flow, and they've even bought back some shares and paid some dividends. Still, the company trades for multiples where the math just doesn't make sense going forward. This isn't financial advice, yet it's going to be hard to outperform with Novo Nordisk. We can see that in our investment tools, which today says Novo Nordisk has a fair value of around $70 per share. That's half of their 52-week high, down $8 from their 52-week low. While it's a popular stock, Novo Nordisk looks overvalued. To find stocks that are undervalued, sign up for our investing tools and get exclusive bonus coverage of 105 stocks and counting.